Thank you. Good morning, everybody. To our honorable guests, all protocols observed. I just wanted to share that this is my 8th visit to Ethiopia since taking on my role, moving from Asia in February 2023. And I'm very happy all the time to be coming to your lovely country. It is my pleasure to kick off our discussion with a few remarks on the theme, Building Strong Foundations for Resilient Capital Markets. Capital markets in Africa hold significant potential to finance critical development sectors, including housing, infrastructure, and agribusiness. They can also support the development of small businesses and help address climate mitigation and adaptation. In East Africa, over $115 million from pension funds have been invested in infrastructure and housing. Additionally, there has been increased activity in the green bond market, where IFC has been partnering with local banks to issue green bonds. We believe, with the right conditions, this number could be even bigger, and we are working with partners to achieve this. As others who have spoken today have highlighted, deep, efficient, and well-regulated local capital markets provide long-term local currency finance for governments, financial sector participants, and small businesses, forming the foundation of a thriving private sector. Key conditions for sustainable capital markets include macroeconomic stability, financial sector development, and a robust legal and institutional environment. These three main building blocks are interlinked and essential for impactful capital market development. Macroeconomic stability is important because it provides investor confidence. We often see that capital market development is linked to certain macroeconomic factors, such as low and stable inflation, economic growth, adequate savings, good fiscal governance, and a strong current account balance. A developed financial system with a robust banking sector and substantial domestic investors is also essential. Banks provide credit and signal companies' creditworthiness to the market, while large domestic investors, such as pension funds, insurance companies, and investment funds, offer stability through their long-term investments and significant asset holdings. In Rwanda, we have been training institutional investors, mainly pension funds, to engage in capital market transactions. This effort is paying off as recent bond transactions have seen strong local investor participation. This includes the first green bond issued and listed in Rwanda, structured with IFC's advisory support. Here in Ethiopia, the World Bank's Financial Sector Reform Program is helping to develop Ethiopia's financial sector, which has the potential to become a significant long-term investor. The third building block is a solid legal and institutional environment with effective mechanisms to enforce investors' rights and robust regulations. Finally, the size of the economy is crucial for market potential. Capital markets need enough issuers, investors, intermediaries, and transactions to reach a scale that allows them to function efficiently and maintain their infrastructure. So how do we develop these fundamental conditions? First, the government must provide the preconditions for capital market development. This includes maintaining prudent macroeconomic management to achieve growth, low inflation and low government debt yields, which helps private companies attract investors, and it also involves establishing a basic legal and institutional framework. Second, the government must ensure good regulation and supervision. This means finding the right balance between market development, protecting investors, and maintaining financial stability. Regulation should be appropriate for the market's development level and aligned with international standards. Finally, enforcement should be proactive to build and maintain investor confidence in the markets. In addition to government efforts, private sector participants must be committed to developing resilient capital markets. This requires a high level of professionalism, which complements the effort of public authorities and financial regulators. The government of Ethiopia, the National Bank of Ethiopia, and ECMA have worked hard to improve the environment for capital market development. Significant progress includes recent FX reforms, ongoing legal and regulatory efforts by ECMA, and initiatives to develop the insurance industry. These are opportunities to further strengthen the foundational pillars for sustained capital market development. Your contributions today can play a crucial role in driving these improvements forward. Before I hand back to Marlon and our distinguished panel of speakers to discuss this further, I would like to thank you all for taking the time to join this event. And again, congratulations to the ECMA for a very successfully hosted event. I hope you will find the discussions inspiring and productive, and I look forward to speaking with many of you over the next 2 days. Thank you very much.
Thank you so very much, Paula. Good morning to everyone. All protocols that have already been established are observed. We're extremely delighted to be here today on behalf of the World Bank Group to this very momentous occasion. So Ethiopia, of course, with its vibrant economy, large population, and emerging financial sector, is at the critical juncture of economic modernization. And pivotal to this is having a financial sector that is inclusive, that is stable, that is deep, and can support access to finance. Therefore, our presence here today is an indication that certainly Ethiopia is on the right track in developing its financial sector, because as we are all aware, at the epicenter of any financial sector is having very robust, sound, and efficient capital markets. So of course, we'd like to extend hearty congratulations to the ECMA, the ESX, for reaching this very significant milestone. I think our presence here today is on no easy feat. A significant milestone has been achieved, and we do recognize the significant amount of work that has gone into this. It hasn't been without sleepless nights on the part of the ESX, ECMA, the regulators, and everyone else, but also to thank all of the development partners who have contributed to this significant milestone. Let me welcome you to the most exciting panel of the day, and this is my unbiased opinion, at least because I'm the moderator, but more importantly, because we have an excellent group of panelists who will join us, and I just discovered that they have more than a half of a century experience in capital markets development. So I'm sure you will all agree with me that they are very well placed to speak to us today as we debate and discuss the topic, building solid foundations for a thriving capital markets here in Ethiopia. So please allow me to invite the panel to join me on stage. I will ask Mr. Akin from the African Development Bank. Please join us. Mr. Zsolt Bango, Senior Financial Sector Specialist based in Washington with the World Bank. And Ms. Grace Ogola, Operations Officer with the IFC, who recently moved here to Ethiopia.
Thank you once again. So to our panelists, just by way of introduction, you have had the opportunity of working on capital markets across many countries, even outside of Africa and the globe. And one of the things I've noticed that here in Ethiopia, having moved here myself 2 years ago, the pace of reform and transformation that we've seen here in Ethiopia in the last 2 years is what many countries take decades to achieve. So I think this is a significant feat on the part of the government and people of Ethiopia. The commitment to the reform agenda, I think, is quite inspiring, and there are quite a bit of lessons that can be learned. In addition to that, the fact that Ethiopia is launching capital markets now means that it has the benefit of learning from all of the lessons and pitfalls of previous countries who have launched capital markets. So I wanted to kickstart the discussions, and I'm going to turn to my colleague Zsolt, just to share with us from his perspective and globally, what are some of the key tenets to building, as it were, a resilient capital markets here in Ethiopia. and for him to share some of the lessons that he has seen that Ethiopia can learn from other countries. Zsolt, over to you.
Actually, probably I have never been spoken in front of so many people, so thank you very much for the invitation for ECME and the authorities, and of course for IFC. It's a great pleasure to be here. First of all, really I would like to acknowledge the enormous job the authorities have done over the last couple of years, like Marlon said, for countries in other jurisdictions, in other regions. Developing foundations for capital market development may take decades, but at least several years. But what we have seen in the last 1.5 years here in Ethiopia is really amazing. So congratulations to you all who have been part of this journey so far. And basically when we are speaking about capital market foundations, the first item which is on my list is basically close to ticked off by ECME, by the authorities led by ECME, the strong legal and regulatory framework for the capital market development, obviously backed by strong supervision and enforcement. We have seen that ECME has following a very dynamic agenda and completing many legal and regulatory work. But now it's time to see in practice whether these regulations are work well. We are very hopeful. We see that ECME has been doing an excellent job in this part. The second foundational pillar I want to mention is the solid and robust financial market infrastructure, with particular regard the depository, clearing, settlement, and payment systems. It's another area where Ethiopia has been doing a great job. We have seen many countries where establishing a CSD took several years in the continent without naming a couple of countries. It took 5-7 years to implement the central securities depository, and now Ethiopia is shortly, just slightly more than after a year, at the door of implementing a close to fully fledged central securities depository. So this is a big achievement again, and this is super critical for capital market development. And also, when we are speaking about the strong foundation for the financial market infrastructure, it's important to mention the importance of dematerialization of securities, and I understand that this is also a regulation which is in progress and which is expected to be completed soon. The third pillar on my list, and actually this has been partially already covered by the previous discussion, the establishment of a diverse investor base. So we understand that at the beginning of this capital market development journey, Ethiopia may need to rely heavily on individual investors, and indeed the country has a huge potential, 120 million individuals. Obviously, this is a huge potential for the capital market investor base. However, it's very important to understand the risk of relying on individual investors heavily, particularly in a country without prior experience of capital market investments. And this is where ECME will have a very important role to supervise and regulate the market. And linked to this, it's very important to mention the need for developing a domestic institutional investor base. we conducted a government bond market development diagnostic roughly a year ago, jointly with the IMF, and we identified that the two pension funds are very good potential for institutional investor-based development. However, the pension fund staff itself need to have a strong capacity building to understand the different instruments, the risk of the different instruments, and the potential for investing in different instruments and following a diverse investment policy. And also another important area for investor-based development is the development of investment funds. Investment funds are, and particularly mutual funds, are excellent instruments to intermediate between individual investors and capital market instruments, and sharing the risk of investment across the board and not exposing individuals directly to the full risk of different investment decisions. So these are very important areas, and then I also want to make a comment on the foreign investor-based development. Our experience is that foreign investors requires certain preconditions in place, and particularly the financial sector is in a transitional period, and foreign investors need service providers. Service providers need to exist in the country to be able to attract foreign investors in a decent scale for capital market investment. And also foreign investors need size of the market, particularly on the bond market, what we see in many different jurisdictions, but there is a certain threshold when foreign investors consider entering the market. So you cannot expect that foreign investors will enter the market in a large scale shortly after the implementation of the different market segments. And last but not least, regarding the foreign investors, it's critically important to consider the risk of attracting foreign investors, because they will not have any bias to the country when there is a financial market distress or any critical situation in the markets, and they will leave the market immediately. And during the global financial crisis in 2008 and the COVID pandemic in 2020-2021, we did see many jurisdictions where foreign investors left the market without any considerations, and the capital outflow went up to several tens of billion US dollar in many emerging markets. And
Thank you so much, Zsolt. I want to make a quick segue before you proceed into something that you just mentioned about foreign investors. And I want to turn to Grace quickly to speak to us about the importance of having a robust regulatory framework to help to create certainty for foreign investors, while at the same time trying to achieve, of course, international best practices and global standards on capital markets, for example, the IOSCO standards, while at the same time being measured to recognize that the Ethiopian context would be slightly different. So if you could share with us a bit about the regulatory framework and how, for example, IFC has been supporting the government of Ethiopia in this regard.
Thank you, Marlon, and salam na. I think I'm learning. I see Hannah, you're smiling. Yeah, it's really great to be here, and just want to say that Ethiopia has been kind to us. I moved here recently and really enjoying the experience. And just to say that our work to support the regulatory framework actually started some time back. And this is in recognition of the fact that as you're developing capital markets, there are different levels of regulatory support and regulatory framework that is required. And so in 2020, we actually worked with the National Bank of Ethiopia to look at the proclamation. and just to make sure that it covered the key elements of legislation that would pave the way for developing a capital market. And then we moved forward at the request of the authorities to look at how to set up the institutions. So really the regulatory framework around the institutional setup, the institutions that would be critical for oversight and management of the capital market. So we actually worked with the authorities to define really the framework for the regulator. So what would a capital market regulator look like, and what would need to be considered in the setup of the regulator? We also went ahead to look at the marketplace, and in this case, if the authorities decided to set up a stock exchange, what should a stock exchange look like? So we also worked with the authorities to define really the options that they needed to consider as they make the decision around what a stock exchange should look like. And lastly, what the market infrastructure could look like. So not so much the hardware, but really the directives are around that. So our contribution really was to share our knowledge working in this space in other countries and to bring in really the technical input. And now, as was mentioned earlier, we have a dedicated program that is looking at market development more broadly. And so in terms of the regulatory framework here, we're working with the authorities on the government bond market and looking at how to enhance its efficiencies and what would be required to enhance, market-based pricing, a yield curve, and really a way that the government bond market can be accepted as a reference point. And now also the non-government bond market. So we've started to look at how this market can be structured, what the framework should look like. And I think the next step, and I think other development partners are contributing to this, is really the products that will be in this market. So the framework around that, defining what that would look like. So I think, as you can see, there are different levels, the initial proclamation, the institutions, and now the market development and the products. There's a lot more we've done and we could do. I think, as Zsolt has mentioned, is on the institutional investors and really investors as a whole, the environment within which they operate, the investment guidelines. How do the investment guidelines enhance their participation in capital markets or not? And then looking to address those gaps. So really, we cannot underscore the importance of a legal and regulatory framework.
Thank you so much, Grace. And, for there to be resilient capital markets, there must be sufficient depth and liquidity. And this is one of the challenges that we have seen around the world, certainly for new and nascent capital markets. So I want to call on my colleague, Akin, just to share with us some of his experience and to share some nuggets of wisdom for the ECMA and the ESX on how we could support greater liquidity and depth in the market.
Thank you very much for the question. Maybe I should start by saying, as the African Development Bank, we're a bit outnumbered on this panel. I see 3 World Bank IFC people, but it's not representative of the work we're doing. We're equal partners. We're doing a lot together in capital market development in Ethiopia, and it's good to be here. First of all, let me congratulate again the work that ECMA has done in putting this together. I think I like the first question Marlon had posed. He was talking about the speed of development in Ethiopia's capital market, how things have moved on very, very fast. And I think something that struck me is when I started coming here, it's about maybe 2 years ago now, especially for capital market development support. The team that we met at the beginning is the team that is still driving a lot of this work that is being done. Dr. Tilaun, who is the CEO now at ESS, I know he was part of the Capital Market Implementation Committee. He was maybe a senior consultant then. And Dr. Book was running the CMA. Now he's at ERH. Got promoted to that. I'm sure Ms. Anna would have been somewhere also in the capital market industry. So you have a team that has been called to developing all of this background work that has been done so far, and that's probably why you're able to see a lot of this speed of development. And then before I come to your question on liquidity, and I'll just briefly touch on the work we're doing at the African Development Bank. Our approach to supporting capital market development is three-phase. There's the upstream work we do, there's midstream work, and then there's downstream work. The upstream work we do focuses much more on creating an enabling environment for capital market development. And a lot of this has to do with capital market master plans, supporting regulatory frameworks. A lot of this work, we've been involved in Ethiopia. We've had consultants working at the National Bank of Ethiopia. We've had consultants working at EIH. And all of this work led to capital market proclamations that have led to the establishment of the CMA and the exchange that's starting very, very soon. In terms of midstream work, here we look at much more deploying our capital to support capital market institutions. For example, in East Africa, we've recently provided $10 million capital, equity capital, to a company called Damana Guarantee Company Limited, which has the mandate of providing credit enhancement or guarantees for corporate bonds that would be issued in East African capital markets. It will start with Kenya, but it will gradually move on to other East African countries, and that should include, I believe, Ethiopia in the near term. And then in terms of downstream work, a lot of that has to do with knowledge management. There's been comments around having institutional investor base. So we're supporting knowledge work, we're supporting capacity building, and this work that's being done here today, the Capital Market Summit speaks to some of the work we're doing in capacity building development. So I think for liquidity, for us, it's having much more product depth, having diverse instruments on the market, not just equities. You have corporate bonds, you have thematic instruments, you have green bonds, all of this, developing the institutional investor base. Once you have all of this in place, you should be able to have a more vibrant, deeper capital market, and that should, over the time, support our liquidity enhancement in capital markets in Ethiopia. Thank you.
Thank you so much, Akin. And just to push back a bit and to peel the onion a bit on where you're going with the conversation, can you speak a bit about things that can be done to instill confidence, investor confidence? Because in order for there to be listings, obviously the investors or participants in the market must feel that there's sufficient confidence in the market either for them to participate in one way or another. So just asking you if you could share a bit about what can be done to instill greater confidence amongst investors in Ethiopia.
Yeah, I think that would start from regulatory work. It was this ECMA DG had mentioned even, I think that was the first panel on the work that was being done on regulation. I'll give you an example, the work we're doing in Mauritius. For Stock Exchange of Mauritius, we supported them last year to institute a new automated trading system, right? It's a robust platform that not just supports desktop trading, investment in securities, but it also has this MySem online application that can support direct investment in the market. But one key part of it was also making sure that there's that risk management framework in place, right? So that whether there are market infractions that want to happen, immediately these are spotted, right? If there's any volatile instrument, there's any suspicious transaction, it's a robust, in-depth, and real-time monitoring of a market instrument. So I think where you have technology being deployed in this safe way and where investors are able to be sure that there's a regulatory framework, maybe from the Capital Market Authority, in this case of Ethiopia, and even at the exchange, that there's a lot of work being done, deploying regulation, but doing it in a safe way to make sure that there's risk management frameworks in place to support capital market investment. That would then strengthen investor confidence in the market. There's the role of investor education. I know that's ongoing in Ethiopia. There's a project that we have here with government ministries. There's a part of that, package of that we have dedicated towards investor education, brochures, I think even direct market outreach in schools, on the radio, just social media, just make sure all of that support is in there. So I think tackling it from different angles, from the regulatory angle, from the market demand angle, all of that can then support much more investor confidence in the market.
Thank you so much, Akin. And Zsolt, I want to come to you a bit to speak a bit about innovation and technology. I think throughout the financial sector, not peculiar to capital markets, we're seeing that there's a significant push towards the use of digital technology, blockchain, AI, and so forth. So I wanted to hear from you what role you see this playing and how we could use some of this technology to our advantage here in Ethiopia, either for greater efficiency, greater regulatory support, and so forth. Thanks.
Thank you, Marlon. I'm a kind of traditional person, so I myself see these digital innovations cautiously, but for capital market development, and particularly in the case of Ethiopia, when you start basically from the scratch, obviously the country can leverage those innovations that prove to be efficient in other jurisdictions. However, in a broader context, it's critically important to establish the basic infrastructure, the traditional financial market infrastructure first. And this is what I already mentioned and also discussed by the previous panel, the importance of developing central securities depository and solid and robust payment system. Blockchain technology have been tested in many jurisdictions, particularly with regard bond issuances, but this segment has yet to pick up. So I don't think that in the early stage of the market development, Ethiopia can invent the wheel again for blockchain technology and implement something that can be useful for capital market development. I see much more opportunity which is evident in other countries in Africa already. The use of mobile technologies to attract investors to the capital market and to reach out to individual investors particularly, and design instruments that they can invest in directly. For example, the government bond market has yet to pick up in Ethiopia, and one potential source of investors could be the individual investors as well. Particularly because the current inflation is still double-digit. The rates that could be offered by the Ministry of Finance, if there is a proper market-based pricing of the government securities, could be attractive enough for individual investors to attract the market. We can mention the case of Kenya with this M-Akiba invention, which may be seen as a good invention, or may be seen, some can say that it wasn't that successful as it was expected, but the main achievement of those kind of inventions, that they can educate the investors, and they can educate particularly individual investors. Regarding the artificial intelligence, I don't want to make a judgment call on this, what could be the role of AI in capital market development. I think it's a very early stage. Probably it will create challenge for ECMA as well, to be able to supervise and of those kind of innovations in capital markets. But I think it would be too early to make any judgment call on the AI role in capital market development.
Thank you. I want to use my moderator's privilege to be the first one to offer a slightly different perspective to my colleague, and maybe to disagree somewhat, because I think Of course, the technology, there are different schools to development, and some people think that every country should go through a particular pace of development, but others think that there are opportunities for latecomers to leapfrog and to move to areas like technology. So I was very excited when I heard our Director General, Hannah, mention about the regulatory sandbox. And I think this is one opportunity for us to use technology in a responsible way, to make sure it's adequately tested and so forth before we roll it out to the market. So Zsolt and I are friends outside of this, so I can disagree with him publicly as well. Thank you so much. I wanna come to you, Grace, just to speak to us a bit about the government bond market and the role you see that playing in really building some momentum here in the development of the market. So if you could share your experience in this regard. Thanks.
Yeah, thank you, Marlon. And just to say that the work that we are doing in Ethiopia under the Ethiopia Capital Market Development Project is done jointly with the World Bank. And just a background to that is as we have supported capital market development projects in other countries and regions, and in this case, I'll use the example of East Africa. When we started our work in 2007, supporting the East African countries, mainly focused on the non-government bond market, it became very clear that there's need for dedicated support on the government bond market as well. And so we've joined hands with our colleagues in the World Bank to support both government bond market development and the non-government bond market development. And why is this? It's because we noticed that there's need to improve efficiency, the transparency, the liquidity, and sophistication of the government bond market. One is to prevent crowding out of the government bond market of other assets by the private sector. But actually, more importantly as well, is to help develop a yield curve or a price reference that will be accepted in the market and that would really guide pricing of other assets. And so really the support that we've been providing has been jointly with, working with central banks, ministries of finance, and other key institutions to support the government bond market. So in Ethiopia specifically, one of the main components of our projects is on the government bond market development. And what we've done so far, we joined hands also with the IMF to conduct a local currency government bond market diagnostic. And it covers several aspects, the primary market, the secondary market, the investor base, the regulatory framework, the market infrastructure. And what we've done is assess, the current state of the government bond market, identified the gaps, and also made some recommendations. And following that, we also, and this is working with the government authorities and key counterparts, and also developing an action plan. And this is more like a reform plan to address the gaps. And the next step, which is actually where we are, is to define the priorities to implement to define priorities for the government that we can support and other partners can support to implement as a way to help reform the government bond market. And I think as you heard from Governor Mamo earlier, there's quite a bit of work that's already being done, and also from the Minister of Finance. And so it's really important to support the government bond market because really those macro-related issues that the government bond market influences may limit the growth of securities markets, the other securities markets, if they're not addressed, especially the non-government. And by non-government, we mean corporate and state-owned enterprises, SOEs. And so we find that this is really critical to define the interest rate environment. And that really makes it whether it makes it viable or not for others to come to the market. And so this is really one key area of support, and I believe, and we've seen the authorities keen to address them, so that then we can move forward, provide a foundation that other market segments can take up and move forward with. So I think on day 3, there's a session that we are going to have with the authorities to move forward this conversation on the implementation aspects of the priorities for the government bond market development.
Thank you so much, Grace. Of course, we could continue on this stage and discuss these topics ad infinitum, but I promise Sirak and Asafa that I'll open the floor for some questions. So by a show of hands, can we have some questions from the audience? Okay, I already see 2 hands at the back. While we get them mics, I wanted just to pick up on one of the things that Grace said, and I'm going to come to Zsolt on this one. So, of course, we have been at the World Bank, we have been supporting the EIH with doing readiness assessments on a few SOEs in terms of readiness to list on the market. So I wanted just for Zsolt to share with us some experiences on institutional investors and the importance of this while we get the mics ready.
Thank you, Marlon. Yes, just briefly, I briefly already covered in my first intervention. So indeed, it's critically important to develop domestic institutional investors because foreign investors, as I mentioned, may leave the market without any considerations. And domestic institutional investors are typically the ones that can protect the market from collapse, and that can provide a continuous source of funding and investment for the capital markets. Those domestic institutional investors will stay there. So the local pension funds, the local insurance companies, the local mutual funds, they need to live in that market for a long time. They cannot change their jurisdictions overnight, while foreign investors can move their investments from one country to another in a very short period of time. So that's why a diverse and strong local domestic institutional investor base is critically important.
I also just want to add, Marlon, that I think we've talked a lot about really the enabling environment and working on the government, with the government, the investors. But there's one lesson that we've learned through the years, that it's really critical to work on demonstration transactions. So these are transactions that are catalytic to, one, help first-time issuers to come to market, and really allow transactions to also inform us on what the gaps still are as we work on the enabling environment. So one of the things we've been doing, and we've actually started to do here, is to look at where is a pipeline of issuers who could potentially be first-time issuers, especially of debt instruments, because there are large long-term funding needs that could be funded through the capital market. And I think we've not had to look further, because we've had interest actually from firms that are really keen to raise local currency long-term funding. So in addition to identifying where the pipeline is to work with these issuers to prepare to come to market. So in other countries, we've actually worked with issuers to prepare to come to market, some even including addressing their corporate governance issues as in preparation, and also to structure their instruments. So last week we were in Rwanda, and I see some colleagues that we worked with here for the listing of the first green bond in Rwanda. And that was one example of just working with issuers, and this is an issuer in the infrastructure space. So as we heard, really capital markets can be used to intermediate gaps in different sectors. And so here in Ethiopia, we've started to talk to work with a couple of potential issuers and just identifying what their needs are, and how to prepare them, so that when the market is up and running and is ready, then a lot of the preparatory work will have been done, and we'll be ready to come to market. So really it's just to emphasize that as we work on the environment, it's important to work on the transactions, because it also bridges the gap with investors, because you can build their capacity with real transactions, help introduce this as a new asset class, help investors understand how to make these decisions to participate in these transactions, and also learn from what else needs to be done to improve the environment.
Thank you so much, Grace. So we'll take our first sets of questions, and we crave your indulgence to keep it short so we could get as many questions into the panel as we possibly can. So the gentleman in the back on the right.
Yes, thank you, Mr. Moderator. When considering building strong foundations for a resilient capital market, one of the foundations I consider is listed companies. We haven't mentioned, I haven't heard anything about listed companies. How have we put any regulatory framework? How these listed companies like, Dow Jones, FTSE 100, and so on, how are they organized in Ethiopia? And what is the legal framework that have been put in Ethiopia? I want to hear about listing companies. Thank you.
Thank you so much.
I actually would like to ask Ms. Grace to comment on the last question the moderator asked the gentleman from the World Bank, and that is the potential of technology in nascent markets like Ethiopia. I would like her to particularly comment on government bonds and non-government bonds. I know she has said that they have done a gap assessment and identified priority areas. How do you see the application of particularly blockchain technology in bringing to market different debt instruments, and especially in a country like Ethiopia, where telecom penetration, mobile phone penetration is very high, and that can directly be linked with the distribution of these instruments to the public. Thank you.
Thank you very much. My question will be, all of you have raised that the importance of institutional investors in operation of the market in general. So mostly you were talking about the institutional investors that seems to be already existent. I want to know what you guys are doing, or all of you up there, in terms of developing the private sector institutional investors. They will be very much crucial. I think we have a lot of individual investors currently in Ethiopia, but the understanding we have, the infrastructure we have, or the complexities in the capital market might not, allow the individual investors to assess the benefits and everything, and engage in the capital market in an efficient manner. So for those, we need mutual funds, we need private sector institutional investors that will be, that will also take the market to the efficient levels that we see in other markets around the world. So is there any job you guys are doing in terms of developing these private institutional investors that will get together individual investors and make great kind or efficient investment decisions? Thank you.
I told you guys this was going to be the most exciting panel of the day, and we had 3 very good questions from the audience. So I'm going to ask Akin to tackle the one on, as I understood it, possibly participants or international companies playing a role in the market, being broker-dealers and so forth, possibly. I'm going to then ask Zsolt to tackle the question on institutional investors, private sector, the role of mutual funds in the space. And Grace, I see the gentleman is trying to get between you and Zsolt and I. So let's see where you come on the technology and the blockchain question. So let's start with Akin, Grace, and then Zsolt.
Thank you, Moderator. The first question, the way I understand this is, the question was about regulations that can support listed companies. And I think the poser of the question mentioned the Dow Jones and maybe other market trackers. Listening to the earlier comments, I think it was the first panel, the understanding is that the first capital market transaction is ongoing. That's Ethio Telecoms, for which 10% of the shareholding, I believe, being held by EIH, is being made open to the market. So that is a demonstrative transaction that is going on. It would be good to monitor how that would shape out. I remember there was a poll that was put on the screen. I thought the first moderator, Sefa, would analyze that poll, but the question was on the likelihood of the success of this Ethiocoms listing, and I saw that majority of the voters think it would not be fully subscribed. I was quite surprised to see that, but yes, there's one demonstrative transaction ongoing. I think that should address your question. In terms of what you mentioned around Dow Jones tracker, if I understand that correctly, I believe this is the role of the ESS. Normally, there are indices trackers that are introduced when the market starts operations, which would track the number of listed companies. In a lot of situations, there would be those that would look at the largest, maybe 10 companies listed at the market. So it gives you an idea of how those top companies are performing. We've worked in other markets where there are even premium boards or SME boards created just basically to look at, to allow whether it's a mutual fund, institutional investors create dedicated, whether it's ETFs that can just basically track our investments in some of these specific companies. For Ethiopia, it's quite early stage because we'll start with Ethio Telecoms, but I do remember that the EIH CEO had also mentioned that there's an SOE, there's a strategy ongoing, which I believe would lead to many more companies coming to the market over the near term. So I think that should maybe give you some comfort. Maybe just to touch briefly on the last question on the institutional investors. I think you're very, very right. It's not just focusing on government type of pension funds. There's a need to expand private sector-led institutional investor funds, maybe whether mutual funds. And from the African Development Bank, the way we're doing it is we're looking at a regional approach to this. We're working with an association called African Sovereign Investors Forum, which is made up of sovereign wealth funds across the continent. There are about 12 sovereign wealth funds involved in this association already. And then it's basically to allow them to, in a lot of cases, pull capital together, pull funds together to invest cross-country in infrastructure projects in particular. And also, I think it's also important to mention that there's a need to have different products exist. If you have the product side exist, then you can have, even when you have mutual funds trying to raise capital, they know that there's the supply side ready for investments. For example, in Nigeria, we supported an institution called InfraCredit. And basically what InfraCredit does is it provides guarantees for bonds that are issued in the market. Once it provides these guarantees, pension funds, mutual funds have the comfort of investing in these bonds or money market instruments, whichever one it has guaranteed. And to date, this institution has supported more than $300 million. It's attracted funding from pension funds, mutual funds, up to over $300 million, which has been invested through capital markets.
Thank you so much, Akin. So I will go to Grace next.
Yeah, thank you, Marlon. I think I'll take a middle point on the technology. And I think I'll just say that I think when you're thinking about technology for a market, there are certain things to consider. One is, what is the purpose for the technology? What do you want to achieve through it? And for a market that is starting out, I think one of the things is looking at efficiency, and as much as possible, really moving from a manual way of doing, trading or issuance to a more automated process. And I think, Dr. Tilahun talked a lot about Kenya. And interestingly, for a long time, Kenya has had a very manual process, especially on the government bond market. And recently that has changed. And really the objective is to really enhance efficiency so that the primary market issuance is automated, and you have secondary market trading that is also automated, and of course the settlement systems are efficient enough. So I think one of the considerations is, what do you want to achieve as you look at technology for your market? And I think one benefit is really efficiency. But on the other hand is looking at the cost of the technology itself. Is there sufficient activity in a market to support the cost of purchase of that technology and maintenance? And so one of the things that we recommend is looking at whether there are ways to share existing technology or existing, say, infrastructure at the beginning to manage some of the costs. So that's one thing to consider when looking at does it make sense for our market. The other is, I think using technology needs to align with where the economy is and where the people you're targeting are. So the example that Zsolt gave of Emakiba, where the government, there was a government bond issued that was distributed through mobile technology to retail investors. That could work because there was already M-Pesa and ways in which people were transferring money and accessing and paying for services and doing that. So I think looking at is the technology you're aiming to introduce aligned with with the access of the investors in your country? Can they use that technology to access, say, the capital markets or to trade or to do whatever? So that's really important. And I think lastly is the issue of transparency and oversight. So for the regulator as well, as you introduce, is this an area that you're able to have oversight over the activities that are going through? It may need some partnership. So I think in a nutshell is to say the decision of whether to adopt a certain form of technology will need to consider all those factors and make a decision that will be best. I think what we've seen lastly is just that countries have taken phased approaches in adopting technology, especially advanced technology, beginning at a lower base to build, to get the experience to build activity in the market, and then enhance that and progress. So I think that is my diplomatic way of managing the distance between the two of you.
Very well done, very well done. So we hate to be the ones standing between you and lunch, and as fascinating as this discussion is, we are conscious that the Skylight Hotel has done a fantastic job in preparing a sumptuous meal for us all. And there's a networking lunch, so very happy to continue the discussion over lunch. But let me, of course, extend thanks to our panel for such an engaging, thought-provoking discussion and for bringing their experience to bear on this session today. Many thanks, of course, to the Director General at the ECMA and her team, as well as Dr. Tilahun at the ESX and his team, for recognizing the importance of this type of dialogue. I think it's with this type of dialogue we will continue to move mountains and to build nations. So we should encourage the team to continue to do more of this. And of course to the audience for, one, being attentive, and of course challenging us with very strong questions. So without any further ado, let me
say thank you on behalf of the panel and wish you a great lunch and the rest of the Capital Market Summit. Thank you and have a good day.
Thank you, Marlon, and our panelists. We still have more engaging sessions coming up, whether you're a company looking to raise capital or looking to become a licensed service provider, or just want to know what the opportunities there are as as an investor in the capital market ecosystem. The afternoon sessions are not to be missed. We will now break for lunch. May I kindly ask everyone to stay seated to allow our VIPs to exit the hall. Thank you for your cooperation. The afternoon session will start at 2:30. የባንክና የኢንሹራንስ ተወካዮች እባካችሁን ሆልዌው ጋር ወደሚገኘው የኢሲኤምኤ ቡዝ ከምሳ በፊት እንድትመጡ እንጋብዛለን። Enjoy your break. Thank you.